Hello and welcome to Livewire Buy, Hold, Sell. My name is Chris Conway. With interest rates coming down, property stocks are looking increasingly appealing. So today we're going to be running the ruler over the ASX property sector. To help me do that, I'm joined by David Wilson from First Sentier Investors and Matt Williams from Airlie Funds Management. Gents, welcome to Buy, Hold, Sell.
Thanks, Chris.
Thanks, Chris.
All right, before we get to the stocks, the property sector has had a tough time of things in recent years, particularly certain segments like office. So Matt, I just wanted to get your assessment of the space and any trends that you might be seeing now.
Look, I think office has bottomed. Maybe famous last words, but things are looking better in terms of valuations that we're seeing coming through. But I think incentives are the big sort of bugbear of the industry. They're still paying, the landlords are still having to pay a lot of incentives. So look, even though we may have bottomed, I'm not, I don't think it's party time in the sector, but you can feel comfortable that things are looking up in office.
Yep. David, anything to add there in terms of office or anything else in the space?
We still think offices still may struggle for a while because of the point that Matt raises around incentives. They're actually, they're very expensive at the moment, and so they're really sort of hitting returns. So we think it may take a while. We probably see as the sort of better sector is actually retail. You're still running a little bit of economic risk, but vacancy rates are low, so rents should improve, and there's not a lot of supply coming on over the next sort of 3 or 4 years. So it's probably a bit better space. And in between the two is probably industrial, where we think it's sort of okay. Vacancy rates are probably increasing a bit. So if I had to rank them, I'd go retail, industrial, and still office at the bottom.
There you go. All right, let's get into some stocks. First up, we're going to talk about Goodman Group. It had a bit of a wobble earlier in the year, at least in terms of the share price, off the back of a capital raise. David, buy, hold, or sell for you?
For us, it's a buy, Chris, because of that capital raise. It means it's got its balance sheet in place. So it's pre-funded its growth. It's set itself up for the growth that we think is there in data centres. That's 50% of the pipeline for Goodman's. So with that balance sheet in place, the growth in place, you're going to be talking sort of around 10% EPS growth over the next little while. We think they're in a good place. So for us, it's a buy.
Yep. Matt, it is flat over the last year. Dead flat when I checked today. Buy, hold, or sell for you?
Yeah, that little wobble provided a very good opportunity. It's a buy for us. It's in the portfolio. To David's point, the setup looks pretty good with the balance sheet and the way it is. I think the result that's going to come up is going to be crucial. We're going to see, signposts on how they're executing on, their pipeline, and also maybe some, information around capital partners to come on in. The setup looks good. It's one of the rare companies in the ASX you can get exposure to the theme that's, obviously prevalent, particularly in the US. So I think it makes a good spot in a portfolio.
Yep. There you have it, ladies and gentlemen. We're off to a hot start with a double buy on Goodman Group. Next up, we're going to talk about Mirvac. Matt, again, I'll come to you. It dabbles in the whole spectrum of real estate, so resi, retail and office. Buy, hold or sell for you?
Look, it's not held by us, but I'll say it's a hold overall because I think Campbell Hannon has done a good job so far in reshaping the business away from development. The business has some good assets, has some good office assets, but look, it's a difficult part of the market in terms of its MPC business. They do have a good land lease business. Their joint venture with Pacific Equity Partners, their Serenitas land lease business. That's future upside, I think, as they build that out. But putting it all together with the current valuation, it's a hold.
Yep. David, it has had a pretty good year to date, up 21% since January, so it's blitzed the market. Buy, hold or sell for you?
Well, Chris, I actually agree with a lot of what Matt said, but I disagree with the recommendation.
Okay.
I'll have it as a sell. I think this is a company, and I agree that Campbell has done a great job with the business, but it's a company that continues to struggle to drive EPS growth. It's been flat over the last 5 to 10 years. And so therefore, where what valuation is at the moment, I think that's sort of tough for a stock that's not really sort of growing EPS. I think also, they do have high quality assets, but they have a high exposure to office as well. So for us, it's a sell.
You could say the same. Stockland has struggled to grow EPS over exactly the same period. They've got the same kind of community business. Whether this new management team at Stockland will be able to, change that with Campbell at Mirvac, it'll be interesting.
Yeah, no doubt. Good stuff. All right, next up, we're going to talk about PEXA, so Digital Property Exchange and Settlements. It's had a relatively tough journey since it first listed in 2021. David, buy, hold, or sell for you?
For us, Chris, it's a hold, and it's had a bounce just recently. What you've got, it's a sort of funny blend of businesses. You've got the Australian business, which is really an infrastructure style business, and it's actually a very, very consistent earner. Businesses, very high market share, very high margins, so it's in a good place. Where the upside is for the stock is actually what it can do in the UK. It recently announced sort of the development, if you like, of a contract with NatWest, and so that can drive, if they continue to drive into the UK, then you can see the share price sort of gain from here. But we feel as though they need to sort of generate a little bit more track record in the UK for us to sort of say it's a buy, but as you know, it's a hold, and it's a high quality hold for us.
Yep. Matt, up 16% over the past year, but a lot of that has come recently, as David was saying. So buy, hold, or sell for you?
Oh, look, just to be a bit different, I'll say sell. Because of this bounce, I think the UK is definitely unproven, but a good point that they've made some progress there. I look at the existing Australian business, and it's great. It's a monopoly, and so what's not to like? Well, what's not to like is that they don't have pricing power. You really want a monopoly with a bit of pricing power. Otherwise, how do they use that monopoly? So I think REA, for the exposure to that property, the big Aussie property market, REA is a much better bet because they have pricing power and as we know, are not afraid to use it. So yeah, look, I'll say that after this recent bounce, PEXA take profits here in the short term.
Yep.
I actually agree with Matt on that, is that we actually prefer REA.
Yep.
But
even at these valuations, isn't it on 50 times or something like that?
Well, you can get it cheaper through News Corp, and that's where we've played it. If the way you cut, depends on how you cut News Corp, but we feel you're buying it at a discount in the News Corp structure.
David?
REA is the stock we love to cite as where market often underestimates growth.
Right.
And REA, I can remember back in 2013, everyone was saying the PE multiple on REA was way too high. I'll just remind people, save them looking it up. In 2013, the REA share price was $17. Yep. As of today, I think it's $235. So,
and still expensive on traditional metrics, right?
That's right, but it has pricing power. I think PEXA does. PEXA has they have a CPI link, and so there's no sort of discounting, but they don't price up the way REA does. So I actually prefer REA to PEXA.
There you go.
But we think PEXA's in a reasonable place.
Well, the audience just got a little bonus with that REA group. We didn't have it on the run sheet, but there you go.
I'm surprised he didn't bring out 1993. I mean, this guy's been around. He's been around since I don't know. I was still at school when he joined the market.
That's when I was doing teach-ins for Matt, and when I was at JP Morgan.
Goodness me, there you go. There's a history lesson as well. How good we're going here. All right, let's focus on some stocks that you do like, gentlemen. Matt, I'm going to give you the floor first. What are you liking in this property sector?
Look, I'm going to go with two really boring kind of rent collectors, and that is Waypoint REIT, who own about 400 petrol stations around Australia, and Region Group, who own a lot of neighbourhood shopping centres, generally anchored by Woolworths. And look, these are really quality kind of businesses. They're going to pay you over 6% in a dividend. And you look to the private market where private assets in both petrol stations and these little neighbourhood shopping centres are transacting. They're generally at tighter cap rates than what these two things can be bought at. So look, they're both bite-sized sort of companies. I'm not saying they will get bought out, but it wouldn't surprise me if they're attractive to a big capital player who wants to just put these things away over the long term. So, I quite like these businesses. They're not going to make you rich quickly, obviously, but 6% plus a little bit of capital growth each year, it's okay.
Yep, nice one. David, what have you got for us in the property sector?
For us, Chris, it's Charter Hall. We think, again, David Harrison's done a great job over a long period of time. Stock's on a PE of 20, but it's probably going to get high single digit, maybe even early double digit EPS growth. FUM's probably going to grow from 70 billion to 100 billion towards the end of the decade. So we think it delivers nice growth. It's got a nicely diversified business as well. So for us, it's Charter Hall.
There you go. Some great ideas in the ASX property sector. If you enjoyed that episode of Buy, Hold, Sell, make sure to give it a like. And don't forget to follow our YouTube channel. We're adding lots of great content every single week.